Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
For this session, I'll be looking at petty cash book. At the end of a lesson, you should be able to prepare a petty cash book from a list of transactions. But before we get there in looking at an actual preparation of a petty cash book, we're going to interpret a sample petty cash book. Here we have the petty cash book. And as you know, any book or any source document, whatever you're preparing, the title is relevant. So by looking at the petty cash book, you are able to identify the title. And petty cash book, there is a title. Now, part of the title should be the name of the business or the name of the owner. But in this case, there is none. That will be a part of the demonstration. Now, the page number that you're seeing is very important for folio references. And here we have the several columns, right? Now, looking at the petty cash book, there is a debit side and a credit side. But which side is the debit side? Your receipts column basically represents your debit. So once there is a receipt of money, whether by check, whether it's from another transaction, someone had paid some money to the business and that falls in the petty cash range, then of course it will be recorded in the petty cash book. So once there's a receipt of money, then of course that is placed in the debit column. If it is that it is within petty cash range, that is recorded in the petty cash book. And please note that petty cash is an asset. It is a current asset. All right. Now, the payments represent the credit side of the petty cash book. Earlier, I mentioned that the petty cash book is a current asset. So therefore, it carries that same rule, same double entry rule, where an asset increase, you would debit, and if there's a reduction, you credit. So that is why the payments is on the credit side. So do remember clearly that the receipts represent the debit, while the payment represents the credit. All right. Now, usually in terms of debiting and crediting, you're used to a T, right? So your left-hand side would have the same columns as the right-hand side. So your debit would have the same columns as your credit side. But in this case, we are not seeing specifically the same columns on the debit and the same columns on the credit. What makes a distinction are the receipts column and the payments column. Now, how do we, in terms of the date, both debit and credit side share the same date column. It's just that when you're recording the amount, it is placed, if it is receipts, that's on the debit, that is placed under the receipt column. And if there's a reduction, that is placed under the payments column, which is your credit side. The details column, both debit and credit share that as well. Folio or voucher number, both debit and credit share that. If it is a folio, then of course you would put the folio. Like you're seeing in this sample, the folio is CB6 representing cash book, page 6. Now, in terms of the voucher number, you're seeing 1, 2, 3 down to 7. These are coming from the petty cash voucher right there. Now, here are some additional columns. We have stationery, posted, travel, purchase ledger, and we have folio. Now, these columns are referred to as analysis columns. Basically, the analysis columns are used to analyze those payments, and analyzing makes it easy for you at the end of the period to know exactly how much is it for stationery for the period, how much is it for postage for the period, how much for traveling, etc. Now, at the end of the period, the totals are transferred to the respective analysis column, respective expense account. So there's an expense account that would be generated for stationery, and it would show that stationery for the period is $43.99. And of course, you're seeing GL below that. The GL represents general ledger page 6. But what it is saying to us is that our stationery expense account is found in the general ledger on page 6. At the end of the period, you're going to transfer this $38.12 for postage. What it's saying is that for the entire period, the value for postage that was paid off for postage is $38.12. In terms of whether you're going to debit or credit your respective analysis accounts, you would be debiting. Why? The petty cash book is credited, so therefore the corresponding entry in those analysis columns, the expenses accounts, basically would be debited to complete double entry. And apart from that, once you pay the expense, then there's an increase in the expense, so you should debit. At the end of the period, after you have total, you would total your receipts column, total all your analysis columns. And in this case, we're seeing that the total paid out of petty cash fund is $140.32. And then the account is balanced off at the end of the period in terms of this sample. The balancing off process can take place after the petty cashier is reimbursed the amount that would take the interest back to the agreed float, right? In terms of the float, we're seeing a debit of $150. So basically what this is indicating is that the petty cash float that is being maintained on the impress system is $150. When you, at the end of the period, whatever is spent or whatever is needed to take the impress back to the agreed float is what the petty cashier would have been reimbursed with. Reimbursement can take place at the end of the period. And if it is at the end of the period, you have to give back the petty cashier what is needed to take the float back to what it was, the agreed float, back to the impress amount of $150, then you would balance off. But if it is that you are to reimburse at the beginning of the next period, you would balance off and then you would reimburse. Just in this case, like in this case, we're seeing that the balancing off process took place first, finding the difference between the debit and the credit, the regular balancing off process as you would do for any account. And then your balance brought down is entered to complete the balancing off process. And then this $140 is then reimbursed to the petty cashier to take back the float, the $150. All right, you're seeing the details cash. In most cases, the petty cashier is given cash because they're in the same organization. So you would just give them the cash out of the main cash amount, main cash account. So the petty cash account would have been debited while the regular cash book would have been credited to show the reduction in the cash value. The petty cash is debited to show an increase in the petty cash book. All right, now let us look at an example of preparing the petty cash book. Here we have J. Lee keeps our petty cash book on the impress system of $30. What we're saying is that at the beginning of any period, J. Lee would maintain an impress of $30. Nothing more, nothing less. For the month of October 2021, our petty cash transactions were as follows. So we have a list of transactions that would take place, that would be made by the petty cashier. Now, what are you required to do? Enter the transactions in the petty cash book with analysis columns for postage, traveling, and petrol. Please note that the analysis columns may differ based on the business, so questions will be unique with the analysis columns. And the analysis columns are usually determined by the owner or the manager of the business. So remember that your analysis columns may differ from question to question. Basically, different businesses carry different analysis columns based on the expenses that are paid out of petty cash book. The next thing is that you would balance off at October 31st, 2021, bringing down the balance on November 1st. And then you would reimburse the petty cashier and restore the imprest on November 1st, 2021. In this lesson, I'm going to look at number 1, while number 2 and 3 will follow up in another lesson. So let's get to preparing that petty cash book. All right, so here we have our blank petty cash book, and remember the analysis columns are postage, traveling, petrol. You're seeing ledger account because for this question, there is a payment to a creditor and that value falls within the petty cash range. So the petty cashier would have to make that payment. So that has to be recorded in our petty cash book. Okay, now let us go. Petty cash balance at October 1st is $10. What this is saying, at the end of the last period, there was $10 left in the petty cash book. So the petty cash fund there is $10 coming from the last period. Let us make that entry. So our date is October 1st. Our details, balance brought down. And remember, it is an asset, so therefore it carries a debit balance, and that amount would have to be recorded under the receipt column. All right, let's move into October 2nd, restore the imprest. Now, what we have in the petty cash book is $10. When you restore the imprest, basically you're taking back that imprest to the agreed float. At the beginning of the question, it was indicated that within the petty cash, there's an imprest that is maintained of $30, right? Now, basically, within the petty cash book, the petty cashier to start the period must have the same amount that is being maintained on the imprest. So it should not be nothing less, nothing more. So at this point in time, we need to restore the imprest. What you're doing is reimbursing the petty cashier. What you're basically doing is taking back the petty cash value to the agreed float of $30. How do we know how much to give the petty cashier in order to restore the float? Basically, you'll find the difference between the imprest and the balance. There are cases where you would just start with the float. In this case, there is a balance, so we need to ensure that we restore the imprest based on the transaction. Now, $30 minus $10 give us $20. So the petty cashier needs to get $20 in order to restore the float. The date is October 2nd. Remember, your date is very important. You need to make a record of that. Our details will be cash because basically the amount will be coming from the regular cashier out of the cash account to pay it over to the petty cashier so that that particular person can make the payments for the period. If it is that the transaction stated restore the imprest by check, then you would use bank as your details because definitely your bank account would be reduced in that case. So your petty cash book must be debited with that 20 because the petty cashier received that amount, while your cash account would be credited in the cash book to record that reduction in the cash based on the double entry rule. So we have restored the imprest. Now, October 4th, bought postage, the voucher number is 1 and the value is $2. Our details is postage. The voucher number, don't forget to record that because that is given, and the amount there is $2. All right. Now, remember that when you make the payments, the amount is recorded twice, once under the payments and under the respective analysis column. Now, postage, based on the analysis columns, postage, traveling, petrol, the appropriate one there would be postage. So we record the amount in that same row. Ensure it is in that same row. Okay. Now, backtracking at October 2nd, in terms of folio for the cash account is located in our cash book. So we're going to use CB to represent that. Now, let's get into October 9th. And there is a payment to J. Brown, a creditor, and our details is J. Brown. The amount, the voucher number is 2. Don't forget to put in your voucher number. And the value that was paid out to J. Brown is $3. So under the payments column, we're going to put 3. And we're on the credit side because we're making a payment. Now, once you make that entry under the payment column, remember, you need to look for the respective analysis column. And because this person is a creditor, let me put in bracket right here, creditor. Because the person is a creditor, then we're going to use the ledger account analysis column, enter that same amount that was paid out to the creditor of $3, and under ledger folio, because it is a creditor, we're going to use PL to represent purchases ledger because J. Brown's account is located in the purchases ledger because this is a creditor. Let's continue. We have October 11th and we have paid bus fare. So our details there is bus fare and our voucher number is 03. Don't forget to record your voucher number. That shows evidence of the transaction. So the cross-referencing can be done. There can be a check to see that the actual payment was made used from the petty cash book based on the check in the petty cash voucher book. All right. Now, the amount that was paid out for bus fare is $6. So we represent that under the payments column. And remember, to complete the entry in the petty cash book, you need to look for the respective analysis column. And bus fare basically is categorized as traveling in this case. So we'll put that under traveling. All right. Now, so notice that October 4th, 7th, and 11th, the amounts were recorded twice, once under the payments column and once under the respective analysis column. Let's go into October 17th. And this states bought envelopes. So our details there is envelopes. We're showing what we had made the payment for. The voucher number is 04. Don't forget to put in that. And the amount is $4. Now that we have the amount under the payments column, we need to look for the respective analysis column, and envelopes is categorized as postage. So we put the $4 right there. Now, October 23rd, receive cash for telephone calls. So your petty cash book is used to make small payments. But similarly, if it is that there is any receipt and it fall under the petty cash range, then of course that is placed in the petty cash book. So the receipt of $2 from telephone calls, so our details is telephone calls, and our voucher number is 05. The amount is not placed under the payments, but under receipts, because that is showing that you have received that $2, right? So it could be a case where an employee made a call and they had to pay for the call, or it could be a case where a customer came in, wanted a call, and you sell that call to the customer and the amount falls under the petty cash range. You'll make that entry in the petty cash book. All right, so that is showing a receipt of $2. Now, we are at the last transaction, which is October 26th, and that is bought petrol. So our details is petrol, and the amount, before we get to the amount, it is 06 for the folio number, which is the voucher number, and the value is $9 placed under the payments column, And we need to look for the respective analysis column, and that is petrol of $9. If there wasn't any column for petrol, analysis column for petrol, then it could be categorized under traveling. Okay, now we have made all the entries. Guess what? Join me in another session where I will be looking at number 2 and 3 of this question, where you are asked to balance of the petty cash book, bringing down the balance on November 1st, and reimburse the petty cashier. All right. And in that same session as well, I will be looking at where the petty cashier is reimbursed. So number 3 would then be at number 2, and number 2 would be the last thing. Okay. You would see there's a difference when you reimburse, then balance off, as well as reimbursing and then balancing off. You'll see there's a difference in the layout, the finishing off of the petty cash book. So remember, join me in the next session where I will be looking at number 2 and 3.
Like, share, and don't forget to subscribe.